2024 is going to be another year where the difference in performance between different regional markets is going to be pretty high. In my opinion, some markets are going to grow while others stay flat or even decline. But as investors, there are opportunities in each type of market. Competitive markets do increase in price, but they are competitive, and that makes it harder to get deals. Or on the other hand, declining markets have risk, but also present opportunities for discounts and to negotiate. So today we're going to compare three different markets. They're all actually really pretty hot and popular markets. They're Indianapolis, Atlanta, and Houston. Hopefully you like one of these three markets or you're interested in one of them, but even if you're not, this video is going to be super helpful to you because it will help you understand how to research different markets, what metrics are important, and what you should be paying attention to when you're going out and selecting a market for yourself. All right, for our first market, we're going to talk about Indianapolis. And one of the things that stands out to me about this market and that I like about it is that it has a very strong economy. The median income in Indianapolis is almost $69,000, which if you look at this chart here, you can see has been pacing above the median income for the entire country for as far back as this chart goes. And actually, if you look carefully, you can see it's actually diverging more. So Indianapolis income is doing better than the rest of the country, and that's actually accelerating. The other parts of the economy that are great are the unemployment rate. That's at 3.1%, which is extremely low. It's very low across the country right now, about 3.7%, but 3.1% is very, very low. That's basically what economists would call quote unquote full employment. And so that is very good for that market. I actually recently was looking into different markets in the Midwest for some other content I was making, and I saw that Indianapolis has the fastest growing job market in all of the Midwest. So this bodes really well for the long-term growth of the market. This is just strong fundamentals. When you look at the housing market, shifting away from sort of the broader economy, you see that prices in Indianapolis are about $268,000. Now that is well below the national average of $400,000 roughly for the median home price in the country. Now this is important because one, it makes it easier for investors or homeowners in this market to be able to afford a home. But the other thing that I really think is good here is that if you consider that what I just said earlier, that income is above average in Indianapolis, but the home price is well below the national average, that means it's affordable, and that is very encouraging for the health of the housing market. When you look at rent growth in Indianapolis, you can see that it has been strong and it hasn't really stopped. In many markets over the last year or so, mostly in 2023, second half of 2022, we saw rent slow down a lot. That was expected after years of sort of crazy growth. But in Indianapolis, it has stayed relatively strong. And even though the growth rate has come down from, the absurd sort of 11, 12, 13% levels, it's still at 4%, it's at 4%, which is above normal. It's, usually 2 to 3% on average. And so 4% is still strong rent growth. It is above the pace of inflation. And so that bodes well for rents as well. Now, when you combine this information, you see that cash flow for Indianapolis is close to average. And the way I'm getting that is by using a metric called the rent to price ratio. You basically take 1 month of median rent, you divide it by the median home price in that area, and you get the rent to price ratio. For Indianapolis, it is 0.55%. The higher the number, the better the potential for cash flow. And this is a crude metric, so it's not like a be-all, end-all of cash flow. But when your number is around 0.55%, like it is in Indianapolis, you should assume that cash flow is going to be difficult to find. If you just go and find something on the MLS, it's probably not going to cash flow, the average deal. The important thing, though, is that when I say 0.55, that is an average. And by rule, that means there are some deals that are going to be better than 0.55, and there are some deals that are going to be worse. And as an investor, you should go and try and find them. So there probably are deals in Indianapolis that off the MLS will cash flow as a turnkey property that's stabilized, but they're going to be difficult to find. So when you look at a market like this, you may want to consider other strategies like house hacking, or you might want to consider a renovation, like a value add plan works really well in markets like Indianapolis, but you can still find long-term rentals. They're going to be harder to find. That's what I think about Indianapolis. As we go through these markets and see how they're performing, if you want to learn more about them, the best way to do that is to find an investor-friendly agent in these markets, and they can help you find deals. They can tell you what neighborhoods are good and give you way more information about these markets than I can in this particular video. If you want to meet an investor-friendly agent, you can do that for free. You can go to BiggerPockets.com/agent match now. You put in basically some criteria about what you're looking for, your experience level, all that. And BiggerPockets will match you for free with an investor-friendly agent who can help you learn more about any of these three markets or really any market in the country. So go check out BiggerPockets.com/agent match if you need to meet an investor-friendly agent. Let's look at Atlanta. And this is another market with excellent fundamentals. You've probably heard, but Atlanta has been one of the fastest growing economies, fastest growing cities for like a decade at least, and it's really supported by the data. So if you look at population growth in Atlanta, it is at 1.3%, which is well above the national average. The growth rate of population in the United States has been steadily declining for more than a decade, and it's below 1% now. But in Atlanta, it's at 1.3%. And that obviously bodes well for the demand side of the supply and demand equation, right? If people are being born there, if people are moving there, that means there's going to be more demand for housing, both rentals and owner-occupant housing. And so that's good, generally speaking, to support stable and perhaps growing prices in that market. Atlanta also has a great economy. Unemployment rate is very low at 3.1%, and income is right about the U.S. median average. So again, strong fundamentals with Atlanta. When you talk about prices, it is a lot higher than Indianapolis. It's kind of close to the national average at $372,000. Remember, the average in the U.S. right now is a little bit over $400,000, but it's relatively close there. Now, the growth rate for prices is still positive, and we've heard a lot of markets in 2023 at least declined. Not all of them. On average, they were up across the country. But in Atlanta, they went up about 1.7% in 2023. And that is a good sign. That's about what it went up nationally. So it's keeping pace with national growth. When you look at rent, though, that is something that I think is something to watch out for in Atlanta. It's not necessarily bad, but the median rent is high. It's $1,900 in Atlanta right now. But the growth rate has really slowed. And similar to Indianapolis and other markets across the country, rent growth was insane for a while. And it actually peaked at nearly 20% for Atlanta, which is wild. Now it's really come back down to earth and is flat. And that is sort of to be expected. I've actually been cautioning and advising investors for a year now not to project rent growth in any sort of investments that they're making. And Atlanta is a perfect example of that. A lot of the rent growth that may have happened over 5 years all happened during the pandemic. And so we're seeing a slowdown in rent growth. That is normal, but it is something to know when you are underwriting deals in Atlanta. When you consider cash flow, Atlanta is going to be difficult. You look at the rent to price ratio, it's 0.51%. So again, a similar kind of approach might work here in Atlanta, which is one, you can look into short-term and medium-term rentals. Those both offer better potential for cash flow than long-term rentals. Value add works really well. House hacking works really well. And you are likely to see outsized appreciation in Atlanta over the long term due to the strong fundamentals that we just talked about. Good population growth, good economy, and all that. So that's Atlanta. Let's move on to our last market, which is Houston, Texas. Houston also has a strong economy. That's kind of a theme between these three markets. I just picked them. They're all big, hot markets, but that is just a theme that happens to be across all of them. It has really high population growth at 1.7%. Remember, the national average, I think, is like 0.7% right now. And we saw that Atlanta was good at 1.3, but this has the highest on our list with 1.7%. That's very strong population growth. Now, unemployment rate is at 3.8%, which is still great by like historical standards. It's right around the national average, but it is a little bit higher than the two other markets we looked at. Remember, Atlanta and Indianapolis were both at 3.1%. Income is above the national average at $68,000. So all really good market fundamentals. Housing prices in Houston, this is important to note, have fallen over the last year. So they're around 300,000. Again, that's about 30% below or 25% below the national average. And they dropped last year only 1%. So it's not like one of these markets that was a big boom city during the pandemic and it started to come down. It's really basically flat. 1% is really sort of negligible, but it is important to know for your underwriting. Every market has its pros and cons. It's just important to know what's going on so that you accurately underwrite and analyze your deals and know what you're getting yourself into. So this is just something to think about in Houston, is that prices came down last year. As I said, this comes with pros and cons. Of course, there is more risk if a market is declining, but it also means that sellers may be more willing to negotiate and you might be able to buy at a discount. So some investors see this as too risky. Other investors see this as a great opportunity. It really comes down to what you and your personal strategy, your risk tolerance, all that. So just again, something to note. Rent growth in Houston is going up. So it's at about $1,660 a median rent. And the growth rate last year is the best we've seen of our three markets at 2.6%. So that's really encouraging for potential cash flow, right? Because if prices are staying flat or they went down, but rent is going up a little bit, that means that the cash flow potential in Houston has actually improved over the last year. There's no knowing if that is going to continue, but that is what happened last year. And the rent to price ratio in Houston is about 0.55%. So this is a market, if I were investing in Houston, I actually do, full disclosure, own a piece of an investment in Houston. But this is a market where you may want to look for some value because prices are softening. And so if I were to go and try and buy a property in Houston, I would be looking for properties that have been sitting on the market for a while and where you have some ability to negotiate with the sellers. So those are our three markets. Just to summarize, Indianapolis, very strong economics and a really affordable entry point for any investors who want to get into the market, but potentially don't have the money to afford a down payment or a rehab at the median average. Remember, it's much cheaper than the average price home across the country. Atlanta, overall, just strength sort of across the board. It has very good price growth, excellent long-term potential, but remember that rents are flat in Atlanta. Lastly, we have Houston, which is experiencing a population boom and softening prices, which could offer opportunity to buy at a discount and see long-term appreciation. So that's what we got. And remember, if you're interested in any of these markets or really any other market and want to meet an investor-friendly agent who can go much deeper into the details of each of these markets than I can in these brief videos, make sure to go to biggerpockets.com/agent match to find an investor-friendly agent in the area. Thank you all so much. I appreciate you watching. For BiggerPockets, my name is Dave Meyer, and I'll see you next week.